As usually, we start with euro dollar. As usually, we watch the weekly chart because it's always good to look at the weekly chart when you start your weekly analysis. At the weekly charts, usually you can see the picture more clearly and to distinguish some important moves which will have longer term consequences. For instance, here we can see that after this month, the single currency fell below support line, which goes back to November 2015 and closed below this level. The picture turned bearish for the euro dollar and the single currency found itself under the renewed bearish pressure. Looking at this chart, we can see that the former support levels around 1.11 now play the key resistance area for the euro dollar, and as long as the pair is trading below this level, the picture will remain bearish in the medium term. Euro dollar fell to 7-month minimums below 109 last week and remains here this week. In line with expectations, the European Central Bank left its monetary policy unchanged on Thursday. The market players were focused on the regulator's comments about the quantitative easing program. According to the ECB President Mario Draghi, the central bank discussed neither the extension of quantitative easing or QE, nor the tapering of this program. So, in other words, Mario Draghi has said that the ECB hasn't discussed neither the increase of QE nor the reduction of the monthly pace of QE. The initial reaction of the euro was to the upside. The single currency tried to break higher. We can see this attempt on the 4-hour chart, and we saw that a spike to the upside was formed in the euro dollar. However, quickly the euro reversed to the downside, failed to continue its advance. And such reaction of the market means that investors still think that the ECB will do more easing to support the euro area's economy and encourage staggering inflation. These expectations should keep the euro under pressure. We see that here on the 4-hour chart, we still see the descending trend. The moving averages, the 50 period one, 100 period one, and 200 period one are in position showing that we have a downtrend here. Still, we have another speech of Mario Draghi today, as I have already told you, at 15:30 GMT. And there is an interesting opinion by Barclays. The bank says that Draghi didn't actually give us much information last week. He will have to clarify the situation today. And as at some point, the ECB will have to reduce the pace of asset purchases, either because the pool of assets the ECB can buy is declining, or because the euro area's economic recovery unfolds. And Mario Draghi may say something about the tapering of quantitative easing already today. Such words will make traders close some of their bearish positions on the euro. We'll see the short covering of this position, and the short-term reaction of the single currency will be bullish. On the daily chart, we can see that, as usually, I have these indicators. The indicator is called pivot line multi-time frame, and it is very convenient indicator. You apply it to the chart, and it stays at the chart. The levels are automatically redrawn each week because these are the weekly levels. The only thing you have to do, you have to delete these inscriptions to the levels because they are not automatically remade. And once you delete this inscription, they renew and correspond to the new levels of the indicator. This light blue line is the pivot level. As long as euro-dollar is staying below this line, the weekly outlook is negative, and the odds are that the pair will move to the next support level, which is located at 108.13 ahead of 107.45. However, we can see that on the daily chart on Friday, the candle was rather uncertain. The pair consolidated after the previous decline. On Monday, the candle was small, euro consolidated after these two big bearish candles. And if Mario Draghi does sound less dovish today, then the euro will have potential for a short-term recovery to the pivot level at 109.25. And next we will have to look if the pair managed to take hold of this level to settle higher. The next resistance will be located at 109.93. All in all, we see that on the daily chart, the 50-day moving average went below 200-day moving average and is preparing to dive down below 100-day moving average. These are the bearish developments, and in the longer term, they will act as a limiting factor on the upside for the euro, and it is a sign that once the single currency tries to recover and shows any significant rebound, the sellers will potentially appear at this market, and they will sell the euro on attempts on the currency to rally. So the rallies will be rather shallow, probably not significantly bigger than 100 pips. The level of resistance at 109.93 is a kind of level to start watching for the signals which will allow us to enter new short positions on the euro. All in all, the medium-term picture of the single currency looks bearish, although you can see that on the daily chart, the euro is now rather oversold, and it's been a while actually since the euro has been that oversold. Let's track the dynamics back to the levels where it happened. We need a toolbar for that. Yes, looking at the daily stochastic indicator, you can see that the last time the euro was that oversold, there was the need for a correction to the upside. And this is why I think that in the next several days, we are vulnerable for increase in the euro to 109.25, 109.93. Below the level of a minute. Below Monday and Friday's minimums, around 108.58, we will have our focus changed to this pivot support level. I have mentioned it's 108.13. These indicators are really convenient, and last week these pivot indicators did show us a good target to sell the euro. The euro was trading below the pivot level as it does today, and target at the first weekly support line was the right target to place, aiming at the decline of the single currency.